Good evening, dear colleagues. It's Sunday evening as always, and I am Dan Strelkov and the ForexTimes project. Today, let's consider the likely movement of trading instruments for the upcoming trading week. There will be the euro, as always, gold, the Dow Jones index, which I still suggest to consider selling, and a bonus, natural gas. Dear colleagues, a small from tomorrow, starting from Monday, Community ForexTimes, in addition to the daily morning forecast, will also publish for one calendar month forecast based on the principle of Ralph Elliott's wave theory on various trading instruments. I remind you that in addition to those 9 trading instruments, for which I make forecasts every morning, trading signals will increase many times and will reach up to 15 trading signals per calendar month. That is why I invite you, dear colleagues, to the Community ForexTimes. Don't miss your profit. But let's go. Euro-dollar. According to the Commodity Futures Trading Commission, we see a 13% decrease in buyers. First of all, the trend is still upward, but at the moment we have a corrective decline, that is a 13% decrease in buyers. What actually will be expressed most likely in the decrease of the trading instrument in the first half of the trading week to the level of the market maker's loss, its market maker will be protected. But if on Monday and Tuesday the price can break through to the level of hedge put options and premiums of hedge put options, and you know very well that hedge put options is the level with the maximum open interest in put option contracts, which professionals on the Chicago Mercantile Exchange use to hedge their futures, buy contracts, and the premium level of T-hedge options is the level at which buy futures contracts are most likely to open with maximum volume. That is, in simple terms, it is the strongest support range. Therefore, if on Monday, Tuesday, the first half of Wednesday, the euro can reach this support range, we will already consider buying in the second half of the upcoming trading week. In fact, I will definitely write about it in the forecast. Tomorrow morning. If someone is very itchy, you can try to consider selling 100 pips. You can still make a profit. I wouldn't do that, and I'll write about that in the forecast. That yes, of course, we expect a decline, but after the price probably reaches this strongest support range, we will consider buying only. However, dear colleagues, this is option number 1. I cannot but talk about option number 2, which almost no one talks about. Namely, the fact is that if we consider this trading instrument on the D time frame, we will see an interesting structure. Namely, we have a movement, let's call it, for example, wave A. It doesn't matter what the next wave is. We have an ABCDE triangle going, a pretty obvious triangle in wave B. After that, we see wave C, as the triangle is the penultimate wave structure. Accordingly, wave D is the extreme wave, and the price is unfolding in a very interesting channel. Therefore, now the price is actually very close to the upper boundary of the channel, and nothing, I repeat, nothing prevents it from continuing its global decline within the descending channel. Dear colleagues, there is option D. Option 1 is more preferable, for the simple reason that, first of all, at the moment we can see on monthly option contracts that the price, even during the decline, had to put options with their premiums, have rewritten their expectations upwards. That is, the support level has become slightly above the price and slightly below, which tells us that at the moment the value of the trading instrument is already in the strongest support range, and nothing forbids this instrument to update a little bit of the minimum and start upwards. Moreover, let's take a look at the possible divergences on the MACD oscillator. And in fact, if we see a decline in the trading instrument and the oscillator does not manage to reduce its readings, we will see a divergence. The price will come to the strongest support range. It will most likely be the end of the corrective wave C. After the formation of a pattern to buy, exclusively buying, this is the plan for the coming trading week. There is a very painful topic on gold. The fact is that gold is likely to continue to decline. We can see that the buyers have decreased by 5%. This indicates that we have an uptrend. But at the moment, the decrease in buyers indicates the continuation of the corrective decline. We have one corrective wave, a second corrective wave, and rightly so, we are still missing a third corrective wave. For example, there is a corrective wave A, B, and missing wave C. Now the trading instrument is moving within the framework of corrective decline. For example, wave 1, wave 2, now wave 3 is developing, then another 4 and 5. This is the most optimistic forecast at the moment. Therefore, it is recommended to consider selling in gold. Why did I say sore subject or sore story in the beginning? The problem with the market maker's loss level with the bottom of the range. The market maker, namely, dear colleagues, is close to the value of the trading instrument, and we know that market makers are very fond of protecting their levels. And in case the price breaks through this level, the market maker will support it until the end of the trading week, when the expiration of weekly option contracts will take place. He will protect his money as it actually happened in the current trading week. Please look, the price was declining during the trading week, but in the second half of Wednesday, the price went below the lower boundary of the market maker's range. That is below the lower level of the market maker's loss. And the market maker already realizes that at the moment of expiration, he will suffer losses. What happened to the second half of Wednesday? A sharp growth, and at the moment of expiration, the market maker got his profit, and quite big. Moreover, the growth amounted to 50% of the whole weekly fall, which was there. You see, dear colleagues, how the market maker protects his money, how he protects his positions. By the way, in order not to be unsubstantiated, I can show you another obvious example. Here, during the week, the price was at the market maker's loss level. On Wednesday, it went down, and in the second half of Wednesday, look what the market maker did in defense of his money. A sharp rise in the value of the trading instrument. Then by Friday, it went down, and the market maker took his very, very nice profit. And here, as you can see, to the level of the market maker's loss. To me, if the price had reached this YN pre-SI with 75% probability, the market maker would have protected his money. Why do I reserve 25% for the fact that the market maker won't do it? He will do it. He just may not have enough strength. He may not have enough money. He may not have enough power. A market maker is not an omnipotent being. So, dear colleagues, once again, we are considering a tool for continuing the decline. Within the framework, I apologize, within the framework of the correction, but I will be looking during the week at where the premiums of put option hedges will be and whether the market maker will rewrite its loss level a little bit lower, because we are most interested in where this level is on Monday or even on Tuesday and where the price will be relative to it already in the second half of Wednesday, because on Monday and Tuesday, the market maker in principle can look at it quite calmly. But the closer the expiration, the closer Friday is, the market maker, of course, looks at it quite calmly and will protect his money. Dear haters about the Dow Jones index and again about the S&P 500 index, I assure you that something like this is going to happen in the US economy, but you and I, as always, will be the last to know, and we will see a very deep corrective decline in the S&P 500 index all the way down to the 31,000 level. In order not to suffer huge losses while this index is rising, please be kind enough to manage your capital wisely. Don't forget stop loss levels, and don't forget to calculate the lot on your trading instrument based on the percentage, namely the risk as a percentage. I apologize from the balance of your trading account and the size of the stop loss level and a small bonus. Gas. The fact is that gas is going into a very deep correction right now, probably a deep correction. And look, please, the 78.6 level on the Fibonacci grid is as close as possible. I apologize, I'm going to make it more correct, like this, so it's really more correct. Yep, there you go, you can even see better. The 78.6 level on the Fibonacci grid is exactly at the strongest support range, namely the put option hedge with its premiums. Most likely, when this level is reached and a buy pattern is formed, we are likely to see an upward reversal of this trading instrument. Therefore, it is recommended to consider buying already at level 2, that is 456. Thank you very much, dear colleagues. Dan Strelkov was with you once again. Welcome to Community Forex Times. A huge number of forecasts start being published from tomorrow and up to 10 trading signals per calendar month. Come, you won't regret it. Bye-bye for today.